Welcome to the Nightly 5 podcast with Ben O'Shea.
So over the past 6 months, we've seen quite a few ups and downs in the data. Things are pretty bumpy, and I think I've used that term before. Obviously, we try to take a much longer view than just day-to-day, month-to-month, quarter-to-quarter data points. But I think what the most recent data do reinforce is that we must continue to be vigilant about the continued risk of high inflation.
That's Michelle Bullock, Governor of the Reserve Bank, given her outlook on the economy at the RBA's monetary policy meeting at the start of this month. Well, now the full minutes of that meeting have been released to the public and we have a better idea of why the RBA kept rates on hold. Here to explain more is business reporter Adrian Lowe. So, Adrian, long story short, what were the RBA afraid of doing if they hiked the cash rate again at the last meeting?
Ben, the minutes have really put this into quite a cute little phrase of they're concerned about excessive fine-tuning. Now, that means that they think that they're worried if they fiddle too much with interest rates, it's really just going to upset the economy. If they start hiking because of 1 month or 1 quarter's high inflation, it's going to put a lot of pressure onto consumers that they may need to then change back if they realise that the economy is actually just a little bit uncertain and there's a lot of movement going around at the moment. I think the Governor called it noisy. The data is noisy at the moment. This means that there's a lot of volatility in the economy that we haven't really seen before. And I think a lot of economists that particularly that I speak to or that we hear talking about things at the moment, post the pandemic, we don't know what's going on. We haven't had a situation with unemployment below 4% for such a long time, where we've been recovering from high inflation and it's still above target, but that people are still well off financially. Now, I'm not saying that people are well off because they're paying off higher mortgages, but financially people are still okay. And actually the RBA noted today, or in the minutes that came out today, they said that people are saving more than they were expected to.
Yeah, it is very confusing. And for I think a lot of the general public who are novices at this sort of stuff, they're looking at all of these data points going, what does it mean? There's talk of, inflation, but it's not as bad as it was when it was at 8% in late 2022. You look at spending, consumer confidence, all of these different metrics that paint a confusing picture. Michelle Bullock called it bumpy. Is that just, I guess, a reflection that it is uncertain, not necessarily uncertain bad, but the RBA is concerned that if they fiddle too much, which we know is always a problem, they might tip it in an unexpected direction?
Exactly. And I think everyone is sort of perplexed at the moment, but I think what's concerning is that even the economists and the people who are paid to do this are a little perplexed as well. Now, that's not to say they don't know what to do, but they are uncertain because we don't have anything contextually in the past few decades to compare this to. Yeah, right. We haven't had, the pandemic was a once in 100-year helpful event. We don't have a similar economic textbook to model what should happen from here. The last time we had inflation so high was in the early 1990s when unemployment was, closer to 10%. We've had the opposite effect here where unemployment's gone to a level we have not seen since the 1970s. This is really why it's so bumpy, to borrow the Governor's term.
And one little speed bump in the inflation road ahead could be the Stage 3 tax cuts, which are due to come online in July 1. There's new research from Westpac today. I know the RBA will be looking at the results of the Stage 3 tax cuts very closely. What did Westpac have to say?
Well, what's really interesting is that the RBA's modelled the Stage 3 tax cuts impact already, or what they expect anyway, because since the government made the changes to those Stage 3 tax cuts, it's been well known. So it's about $36 a week that the average household will get in addition. Westpac is saying that people will save that they're essentially thinking that they'll need to keep as much more money as possible in their savings accounts that they can. So that also goes for things like the household electricity credit that's coming from the federal government. Several states, I think Queensland is $1,000, WA is $400 for electricity, as well as every other stimulus that states are going to announce over the coming months where we have their budgets come out. People are going to save this money because they're concerned about the outlook. And that is what Westpac does. So they've measured consumer confidence for about 40 years now on a monthly basis. And the levels that we're seeing now are similar to the 90s recession because people are just so concerned about what comes next. The other complicating factor here is house prices are still at record highs in some cities or are well above where they should be given the economic outlook. So this is why everyone's talking about the bumpy road.
Yeah, and no doubt there's still some more bumps to come. Business reporter Adrian Lowe, thanks as always for making sense of this very complicated stuff.
Pleasure.